REITs have been increasing due to recent events, and ADC stock is no exception. Year to date the stock is trading flat, but we can clearly see there is some momentum. And people love ADC stock because of the dividend, and I understand why with dividend yield at 4.7% and of course the monthly payouts. If we look at the past 5 years, we see that ADC underperforms the S&P 500 big time. And keep in mind, this is including dividends. So could this be the perfect time to buy ADC stock? Well, by the end of this video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ADC do? Agree Realty Corporation operates as a fully integrated real estate investment trust, mainly focused on the ownership, acquisition, development and management of retail properties net leased to industry-leading tenants. Diving into the earnings highlights, we see that net income per share decreased 2.4%, which is really interesting. Definitely keep an eye on this number. The good part is that FFO and AFFO are both increasing year over year. To me, this looks pretty decent. Dividends also increased a nice 3% year over year. And net debt to EBITDA is reported at 4.8, which is a great number. Overall, it looks pretty decent to me. It is expected that for the full year of 2024, AFFO will report it in a range of $4.10 to $4.13. Acquisition volume will be around 600 million. Taking a look at their portfolio, we see that grocery stores is by far the biggest sector, with 9.7%. To me, this looks really good, since I prefer a maximum of 10% here. Looking at the top tenants, we see that Walmart is the biggest with 6%, followed by Tractor Supply. To me, this also looks really good, and again, I prefer a maximum of 10% here. Next to that, we see a lot of big names in here that comforts me as well. The top 20 tenants together represent 55% of the revenue. That is a pretty big number. I prefer 50% or lower. For now, it is not something that worries me a lot, but keep an eye on this number as well. Almost 69% of the tenants have an investment grade, while only 16% is not rated. To me, this looks pretty good as well. And in here we see the acquisition volume ever. Since 2022, the acquisition volume is coming down. This is something that worries me a little bit, but also since the 2024 expectations are much lower versus last year numbers. And as mentioned before, the net debt to EBITDA is reported at 4.8, which is a great number. Ratings are reported at B, which is not bad, but I prefer A ratings here. The thing that most people like about ADC are the dividends, and in here we see that dividends have been increasing really nice and steady over a longer period of time now. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ADC is a 6.4 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at almost 16, indicating they are trading around their fair valuation. Later in this video I will show you my 3 price targets for ADC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 560 million, and in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent. We see that margins are decreasing over a longer period of time. To me, this is not a good sign. especially since there are no indicators this will change anytime soon. EPS is flat year over years. I would love to see some increases here. Analysts have mixed feelings about the EPS growth. It doesn't look too exciting to me, to be honest. The average is low single digit here. For the revenue, it is looking very interesting, with 12% growth expectations in 2024. From there, they expect growth to slow down a bit, and for 2027 it is expected to increase at much higher levels again. Return on assets is sitting at 2.3%, which is a low number for a REIT. Return on equity also looks pretty low. And the most important number, return on invested capital, is sitting at 2%, which is a low number, even for a REIT. It is slightly higher than the 5-year average, so that's the positive part here. Current ratio is at 0.71, which is a decent number for a REIT. Nothing special to mention here. Right now, ADC has 2.5 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ADC has 30 million in total cash, so they can't pay down a big chunk of their debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is growing really nice and steady over the years. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 4.7%, which is a great number. Annual payout is at $3 and payout ratio is around 74%, which is around the 75% average for REITs. The 5-year growth rate is at 6.2%, which is a decent number. And they increased the dividend for 4 years in a row, which is really nice. And keep in mind, ADC pays a monthly dividend instead of a quarterly dividend. And here we see the dividends paid since 2014, and to me this looks really good. ADC really likes to increase the dividends at a decent rate, and over a longer period of time this really adds up. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to grow at a historical rate from here. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare ADC stock with the overall market, in this case the S&P 500. Next to that I added N and Realty income. On the 5-year chart we see that ADC returned 20% and this is including dividends. The S&P 500 returned 102%, massively outperforming all stocks in this list. But it has to be said that out of these 3 REITs, ADC did best. On the 1-year chart it is looking pretty interesting, with the S&P 500 again beating all stocks in this list. The 3 REITs are all having significant lower returns. On the 6-month chart it is again the S&P 500 that is beating all stocks again. Both ADC and N had at least a positive return here. On the 1-month chart it is surprisingly ADC that is having the highest return. So bottom line, the S&P 500 was by far the better investment in the past 5 years. But most recently ADC is getting some momentum. So could this be the perfect time to buy ADC stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best deals out there. I'm using a low, mid and high assumption to get the 3 price targets. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 28, 30 and 32. And for the free cash flow margin I'm putting in 70, 71 and 72%. For the PE ratio I'm putting in 20 since it is a REIT. and for the price to free cash flow I'm putting in 12, 13 and 14. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now ADC stock is around $64. I hit analyze and we see a few green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $60, we have a mid price target of $73, and we have a high price target of $89. And to me, the mid price target is the most justified here, indicating that this stock is undervalued. Please let me know the price target that you think is the most justified in the comments down below. My final conclusion on ADC is that I love the business. It is currently in my portfolio and with reason. The company is capable of growing really steady and consistent, and that's really impressive for a REIT, especially in times like this. Other fundamentals also look really good to me. The only big concern I have are the margins. I wish we would see some improvements here since it is decreasing for a really long time now. So it is not only related to the most recent events. From a dividend point of view, things look really good, with a really high dividend yield at a secure and safe level. On top of that, they pay a monthly dividend, which is also really nice. From a value point of view, I think things look still pretty attractive. When the stock was trading a little under $60, I decided to buy some more shares. As of right now, I still think it is a good buy, but I'm waiting a little longer I think. For now I'm just waiting for a small dip and then start buying again. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.